Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. International market, US Treasury yields continued marching higher, but the speed was slowed down. US 10-year was up 2 basis points, closing at 1.15 percentage points, and 30-year was up 1 basis points, closing at 1.88 percentage points on Monday. We at Knight Research feel in the medium term, US 10-year yields will not rise beyond 1.25%, and it acts as a very strong resistance. In the crude oil market, crude is at $55.57 per barrel. Market seems to be range bound for now. Crude's short-term range seems to be $54 to $57. Once the European lockdown measures are relaxed, we expect a new demand coming from the European countries taking crude higher. But for now, crude rally is over and there would be some consolidation in the crude oil prices. In the currency market, dollar index or DXY is at 90.59. DXY's today's range seems to be 90.30 to 90.76. We are seeing some early strength in DXY, but as we had mentioned yesterday, we need more evidences to change our stance on DXY. USD CNY or Chinese Yuan is at 647. USD INR with a high of 73.50 closed at 73.40 on Monday. USD INR's range for today seems to be 73.30 to 73.60. As we had mentioned in yesterday's podcast, USD INR indeed saw a high of 73.50. We now expect USD INR to consolidate and trade in 20 paisa narrow range and ideal for intraday trading. In the domestic market, CPI inflation for December is due today, and market-wide expectation for CPI is to fall below 550 from 693 in November. Favorable base effect and cooling of vegetable prices are the main reasons for the CPI fall. But be aware, crude oil prices are rising again and are now trading at $55 per barrel. Now, time for something interesting. Let's do RBI's 2 lakh crore 14-day reverse repo window announcement and its reaction in the market analysis. Let me ask you questions and answer those questions, and that will clarify what RBI's stance on liquidity is right now. Question number 1. What was the reason to conduct this operation? Answer is to normalize the abundant liquidity. Why before the scheduled MPC committee meeting? These operations are responsibility of RBI and not of MPC. Typically, we used to see this announcement on the MPC meeting day only. What signal does RBI send to the market? RBI is keenly watching the liquidity situation in India and is happy with the growth recovery trajectory and would slowly start taking the supportive measures off the table, which were offered due to COVID-19. In short, a return to normal. This does not mean RBI taking accommodative stance away. It only reflects RBI's view on excess liquidity, which in turn would result in T-bills and shorter end maturities to trade ahead of the reverse repo rate of 335. What impact did it have on the market yesterday? As we anticipated in yesterday's podcast, shorter end of the curve was hit hard. Yields on 3 to 5 year papers rose up to 15 basis points. 522 GS 2025 closed at 511 versus 501 the previous day, marking a 10 basis point increase in a 5-year paper. 577 GS 2030 closed at 592 versus 589 the previous day. We have and will continue to repeatedly remind our clients to assess their portfolio risk and take necessary actions before the union budget. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.